Are you actually making money with your Turo fleet? This is an incredibly important question, and believe it or not, it's a question that many people don't know the clear-cut answer to, but it's a question that will dictate not only how much money you make, but also whether or not Turo is actually worth your time. So in this video, I'm going to be helping you answer that exact question. I'm going to be breaking down how to calculate your ROI, or your return on investment, with your Turo fleet. I'm going to be breaking down why this is so incredibly important and some of the hidden costs that you need to keep an eye on to make sure that you stay profitable. So let's get started. Now, whenever it comes to Turo, there are a lot of different ways that you can calculate your earnings, your profit, your loss, your ROI. There are a lot of different ways that you can go about doing this effectively. And the great thing about Turo is the fact that they offer a handy dandy earnings graph that is a great way for hosts to see in a screenshot view of how much money they're bringing in, roughly where it's coming from, and how much they can expect to earn in the coming months. But the problem with this tool is that though it is very, very handy and it's super useful, it also can sometimes do a bit of harm, because I think sometimes hosts ends up taking this earnings graph at too much of face value, meaning they look at their earnings graph and they think, oh, my graph says that I earned $1,000 per month, so that is what I made in profit. But the thing is, your Turo earnings graph is simply just that. It's your earnings graph, and it doesn't take into account the expenses and what is actually going into running and operating your Turo fleet. But like always, before we dive in, if you guys could do me a huge favor, and if you could hit the like button and hit the notification bell for the YouTube algorithm, I would greatly appreciate it. This helps let YouTube know that you guys are enjoying my content, and thus it pushes my content out to a new audience. So if you could do that, I would greatly appreciate it. Now, whenever it comes to calculating how much money you're actually making on Turo, the first thing that you want to take into account is your expenses. How much money are you spending on your Turo fleet? Now, your expenses are going to be different depending on what types of cars you have, as well as how you paid for those vehicles. Expenses for cars paid in cash are going to be calculated differently than cars that have a loan that you're paying interest on. So you'll want to make sure to have these two types of payments differentiated, and you want to make sure to account for these appropriately in your P&L. The other thing that you want to take into account with your vehicles is your depreciation. Whenever you drive your cars, they lose value. I think 2021 would be the exception to the rule, but more often than not, that is how it works. And whenever you're running a fleet of cars, depreciation does get taken into account whenever you're working out your profit and your loss on your business. But of course, the amount that your cars depreciate will depend on not only the type of cars that you own, what year model those cars are, but also how often your cars are driven. If you have a car that is newer, that has driven 50,000 miles in a single year, that car will depreciate at a significantly quicker rate than an older car that was only driven 25,000 miles for that year. So the exact details of how you'll take this into account with your own P&Ls and whenever you're calculating your own profit will depend on your exact specific scenario. In addition, you'll also have to take into account other expenses associated with your business. So what are you having to buy on a daily, weekly, or monthly basis in order to keep your Turo fleet operational? Now, some of these things are going to be very obvious. Things like oil changes, repairs and maintenance, tires, brake changes, kind of the obvious expenses that you think of whenever you're running your Turo fleet. But other expenses are going to be less obvious, and they're going to be very important to take into account. For example, did you have to buy a very specific phone so that you could store all of your Turo photos? I know that for me specifically, I bought an iPhone 11 Pro Max with over 500 gigabytes of memory, partially and mainly due to the fact that I didn't want to have to worry about running out of space whenever I was checking in and out cars. Or alternatively, do you have to buy specialty tools for your garage or for your fleet in order to keep your fleet operational? For example, HP and I have a garage full of specialty tools that we've bought specifically for our Turo fleet, and these are things that can absolutely be taken into account whenever we're tallying up our expenses. Now, calculating your expenses with your business serve multiple purposes. Not only do they allow for you to get a glimpse into how profitable your business actually is and what things you need to tweak and fine-tune about your business model, but they also can be very helpful in lowering your tax bill. Expenses are a really useful tool with tax deductions, and if you leverage expenses properly, it can have a huge impact on your taxes and thus your finances. But expenses aren't the only important thing to keep track of. You'll also have to keep track of your revenue as well. How much money is your Turo fleet bringing in? Now, this is something that the Turo earnings graph can really help you with, but surprisingly, the Turo earnings graph does not paint the full picture either. You see, this is something I've talked about on this channel multiple times, and it's something that I still get a lot of questions about today. Whenever you talk about making money on Turo, your earnings from trips is just one of those ways that you can make money. In fact, you can make money from damage claims, you can make money from reimbursements, you can make money from cleaning fees or smoking fees, and of course, you can make money from the actual trip that your car was taken in. And the Turo earnings graph only shows a small portion of this. It does not paint the entire picture of where your money comes from whenever you're operating a Turo fleet. That's why I think it's incredibly important that you start keeping track of this in either a separate Excel, maybe through QuickBooks, or some sort of personal method that you develop for yourself. For example, I keep track of not only how much I'm getting paid for my trips, how much I get paid in reimbursements, but I also make sure to keep track of how much I'm getting paid for damage claims or total losses. And then I make sure to keep track of how much it actually cost me to get that car repaired or how much that car was worth. That way I can figure out how much money I made on these specific incidences. These are costs and profit centers that I think can easily be forgotten because of the fact that they aren't accounted for in the traditional Turo earnings graph that they provide you in the app. Now, whenever you know how much money you're spending on your business paired with how much money you're making with your business, now you have the full picture of how your business is doing. You can now figure out what your profit of running that Turo fleet was. But one other great tool that you can use to really paint the full picture is calculating your ROI, or return on investment. Now, the reason why calculating your ROI with your Turo fleet can be an important tool is because of the fact that percentages are the same across the board, but profit is not. For example, if I have a car that only cost me $3,000, I expect for that car to make less than a car that cost me $50,000 because of the fact that the initial investment for these two cars is vastly different. So even though my $50,000 car should, at least we hope, would make way more money than my $3,000 car, it doesn't necessarily mean that my $3,000 car is significantly less profitable. And we use ROI in order to confirm and calculate this. Now, the formula for calculating the ROI looks like this, and it's profit minus investment divided by your total expenses times 100. If you compare the profit in numbers format between a Maserati and a Toyota Yaris, you're comparing apples to oranges. But if you compare the profit in the form of ROI percentage between a Maserati and a Toyota Yaris, you are now putting these two cars on the same playing field and you are comparing apples to apples. ROI really helps you get a clear vision, a clear picture of how much cars are making in relation to all of their expenses, and it really allows for you to see where you're profitable and where you're not. Keeping the metric of ROI in mind, specifically for me, I like to keep track of how long will it take me to make 100% ROI back on this vehicle is something that I keep in mind for every single car that I purchase. For me personally, with my fleet, I like to have a 100% ROI within 6 to 7 months, and if a car can't reach that, I more often than not will not buy it. This is really where we get into like the nitty-gritty of the argument of which car is better, a Toyota Yaris or a Maserati Ghibli or a Mercedes or nicer cars like that. That's a lot of times where people like to bring this up is, yeah, a nicer car is going to generate more money, but will it generate a higher ROI? And more often than not, you would be surprised at the ROI that these lower end economy cars can pull. Now, ultimately, at the end of the day, I'm not here to give you a math lesson. I'm certainly not here to give you an accounting lesson because I'm horrible at math and I am not good at accounting either, which is why I have a bookkeeper and an accountant. But what I am here to do is to get your juices flowing of how you can keep these different numbers and these different metrics into account whenever you're growing your own Turo fleet. I think that once you start looking at cars and Turo as an ROI perspective and on a numbers perspective, I think that you really start to gain a really good image of which cars perform well and which ones don't. Revenue isn't everything, and actually neither is profit. At the end of the day, you want to be making a good return on your investment, and one of the best ways to keep track of this is through calculating your ROI on each one of your cars. Like always, you guys, I hope that you enjoyed this video, and I hope that you found it helpful in trying to improve your profitability as well as your Turo fleet. If you guys are interested in learning a bit more about this, I do have a car sharing course called the Car Sharing Masterclass. If you use the code ROI, you can get $25 off that course. I will include a link down in the description below. Like always, if you have any questions, comments, if you have anything to add, I would love to hear it, so make sure to leave a comment down below. And while you guys are at it, make sure to hit the like button, hit the subscribe button, and hit the notification bell. And I will see you guys in the next video.